Good morning, everyone, and welcome to our panel on rebuilding critical minerals supply chains. I think of it more as alternatives and rather than rebuilding them, but alternatives and tools to strengthen our supply chains. There are several themes that are hanging over the conference, of course, and have been for a few years. Geopolitics are very much in a dynamic, fluid state. We see trade under challenge from all corners, and the energy transition is a constant event. The combination of the three are putting an emphasis on critical minerals, but more importantly, challenging supply chains. As countries, companies and countries think about supply, including on the national level for the energy transition, for military and other strategic imperatives. So to unpack that, we have a group this morning of panelists, and congratulations to Resourcing Tomorrow and Andrew for putting together such a great group. From the far end of the table, we have the Honorable Andrew Raab from Appian Capital Advisory. We have Tom Garnett from Refute. We have Deputy Minister Perelygin from Ukraine. We have Chris Beatty from TechMet, Francesco Gattiglio from Albemarle, and Rob Strayer from the Critical Minerals Forum. And I might ask each of the panelists just to take a moment, maybe starting with Andrew at the end, to introduce themselves and their organizations.
It's Dominic.
Dominic,
That's all right, I'm just checking. You want to be Dominic Raab, Head of Global Affairs at Appian Capital, with the largest private equity investor in mining and metals, with a particular emphasis on public-private partnerships and how we provide the range and the volume of supply chains we need in the critical minerals and rare earth space.
Good morning, everyone. My name is Tom Garnett, and I'm the CEO and co-founder of Refute. At Refute, we're focused on fighting disinformation campaigns by automatically finding the attacks, but also proactively responding as well. And we see that the mining industry is one of the highest threat industries out there.
Hello, everybody. I'm Yegor Perelygin. I'm the Deputy Minister of Economy responsible for the natural resources sector of Ukraine, critical minerals, of course, as well. And I'm also a member of the board at the U.S.-Ukraine Reconstruction Investment Fund. Before that, I was a CEO in the titanium industry. So it's a pleasure to be here.
Good morning. My name is Chris Beatty. I'm the Head of Government Relations and Public Affairs for TechMet. TechMet's a critical minerals investment company that's based in Ireland. We are partially owned by the U.S. government through 3 separate equity investments by the Development Finance Corporation, which makes us a bit unique. We invest across the entire value chain of critical minerals, from production to processing to recycling, and we have a portfolio currently of 10 projects across 4 continents, the United States, South America, Europe, and Africa.
Good morning, I'm Francesco Gattiglio, Vice President of External Affairs for Europe at Albemarle. Albemarle is a leading producer of lithium, bromine, and other essential elements. We are one of the largest lithium producers globally. We have extraction and refining operations in the United States, in Chile, Australia, China, and Germany.
Hi, my name is Rob Strayer. I'm president of the Critical Minerals Forum. We're funded by the U.S. government's DARPA, also known as the Defense Advanced Research Projects Agency. We have seed funding from them. We have companies that represent the upstream to the downstream in critical minerals, so we do analysis and then work with those companies to develop diversified supply chains around the world.
Great. Thank you, everyone, for being here. I mentioned earlier, and one of our earlier speakers today spoke about friendshoring in the context of supply chains in a rapidly evolving geopolitical environment. To say the least, as well as an increasingly transactional view of trade by a number of key trade partners for countries around the world. And that's forcing a rethink of supply chains. One of those options is friendshoring and revisiting alliances. And Dominic, I was hoping maybe we could start with you and with your position now at Appian, an advisory role, as well as your history with government, your views on single source concerns and the need to create friendly networks amongst nations for supply chains.
Thank you. Look, it's very much the challenge of our time, and probably one of the 3 essential elements to reviving or providing the ex-China supply chains that, let's, for want of a better word, the West needs. The first being CapEx and the second being better public-private partnerships. I say that to give you some kind of context. Almost all jurisdictions talk about onshoring as much as they can, and there's clearly value in that. And in terms of jobs, that's important. In terms of trade deficits. But in terms of supply chain security, you probably want, and our advice when we talk to sovereigns and international institutions, you probably want to onshore when you can, but friendshore when you must. And so most governments will inevitably start to develop a hub and spoke model. So, for example, we know that heavy rare earths is big in the news, and 90%, if you include the processing of heavy rare earths, is done in China. So you're not going to find, if you're the United States or the European Union, you're not going to find all of that deposit within your own territorial boundaries. So there's a real case for friendshoring. We've got a good example. There was the recent US-Australian critical minerals framework, which establishes them as high trust partners across the sovereign, but also the private investment space. Actually, it's a good illustration for us. We have an asset called Gibson Critical Minerals. It can provide half of the ex-China supply chain or global needs of heavy rare earths. But then where do you process it? Well, we actually have an asset that can process rare earths in Virginia Atlantic Strategic Metals. Now that's not one yet that we've linked up, but it's a good illustration of how high trust partners working together can friendshore to deliver both sets of needs.
Turning to the EU for a moment, Francesco, I'd be interested in your thoughts. We talked about this a little bit the other day. You know, there are within the EU opportunities for things like the European Defence Fund, EU Critical Minerals Act to support the development of these kinds of trading networks. How do you see that rolling out so far to date?
Yeah, I think we will know more probably tomorrow when the European Commission will publish the Resource EU proposal, which I think recognizes the sense of urgency and the importance of this topic from one side, but also the fact that the Critical Raw Materials Act was a step in the right direction, but it was not sufficient to really kickstart mining, refining, and recycling operations in Europe. If I look at the Critical Raw Materials Act, it had some good elements on permitting. It pushed to have single point of contacts to grant permitting. It pushed to have clear timelines for permitting again. It had the recognition of some strategic projects, and several strategic projects have been recognized by the European Commission. The problem is that these strategic projects at the moment are strategics on paper, because we do not really see a strong support, a strong financial support for these projects to be launched. And if we are not able and ready to do whatever it takes to launch and support what we deem strategic, then it is not a strategic project, very simply. So I hope that Resource EU, the proposal that will be published tomorrow, will shed some light on funding opportunities already now for these projects and for other opportunities in the sector. We know that there are some discussions about including a budget line on critical raw materials and on strategic projects in the next multi-annual financial framework of the European Union, which is for sure something which is welcome. The problem is that the MFF will kick in only in 2028. And funding in 2028 and sense of urgency cannot stay in the same sentence. The other element, still building on the discussion on friendshoring and homeshoring, I think a good thing of the Critical Raw Materials Act is that it recognized the importance of strategic partnership, but we still have some tension between friendshoring and homeshoring. So where do we draw the line? What is a strategic partner and which parts of the value chain we want to focus on? And just to conclude, in a week the Commission is also supposed to publish an automotive plan, which might include some elements on local content requirements, and that might clarify whether it's homeshoring or friendshoring, Critical Raw Materials Act or clean tech, procurement only, or also incentives. Now, we just learned this morning that that will be postponed by a few weeks, and really looking forward to see how the Commission will solve this tension moving forward.
It's fascinating to think about the fact that friendshoring and onshoring can often have a little bit of a conflicting goals, if you would, as policymakers are thinking about how to roll this out. But Dominic, back to your idea of a spoke in the hub, and I want to come back to strategic funding and in support. But before we do, I think the other part of critical minerals is the role they can play in the geopolitics. And I think we've seen some interesting examples of that. And of course, we're lucky to have Deputy Minister Perelygin here to talk a little bit about critical minerals in the context of Ukraine. And we've seen the Ukraine and US, the organization that you're part of, and that becomes part of a bigger story, obviously, geopolitically. How does the development of critical minerals become a tool, and how can your country play a role in that supply chain in a way that impacts the opportunities for Ukraine and other friendly countries for the critical minerals there?
Oh, Mike, thank you for that question. Well, basically, look, it's very simple. It's very simple and very complex at the same time. The thing that we have to understand the most is that we are extremely in a difficult situation where we have such high level of concentration. 19 out of 20 positions for battery metals, they are controlled by one country in terms of processing. So we all understand that it's China. So basically, we understand that the geographic concentration is a big problem for the so-called Western world. And basically, one of the logics that we had when we were building this instrument and when we were deciding on the policy approach that we want to do was, can we look at a supply chain analysis and understand where the needs of where our needs are, where our strategic partners' needs are, and where the U.S. strategic needs are. So basically, we looked at it from a perspective as if Ukraine could be the future hub. So what was the logic? The logic was was very straightforward. We understand that, considering this is a very important fact that, everybody comes to us now, and especially they come to our American colleagues and they say, okay, we want the Ukrainian deal, and this is basically a situation where the Ukrainian deal became a kind of the first deal to shape other critical minerals or CRM basically initiatives in terms of building up funds and mechanisms. So the logic is very simple. We need a market-making instrument to make this happen. Why? Because competing with China on the cost curve or competing with Indonesia, for example, in nickel on the cost curve would be a pretty much impossible task because you're facing a very, very difficult set of challenges. So the only way to really do that and really get the onshoring process running, and especially the friendshoring process running, and get, the strategic allied corridor of critical minerals running, what do you need? You need guaranteed offtakes, you need price floors, you need government activity, you need government stimulation of the sector, and you need to do something about the energy prices. This is critical. Somebody has to take responsibility to make this happen, because the Northvolt bankruptcy in Sweden, it showed us one simple thing. We cannot compete. We're getting beaten at our own capitalist game, and this is a big problem. So basically, we need more government initiative, government activity, and basically using an investment or a reconstruction fund mechanism is one of the best ways, because the investment fund mechanism is allowed to do a couple of very important things. It can facilitate and actually participate in offtake conclusion or offtake realization. It can actually step in as an equity investor. Through the DFC arm, for example, it can become a creditor, and through many, let's call it geopolitical aspects of the deal, it can basically be a political risk and sovereign risk stability mechanism. So we see that the best tool for policy making is getting quasi-governmental or government to private capital partnerships that can facilitate these kind of deals with guaranteed margins, with price floors, and with a good economy, with the long-term offtake contracts. We're not talking about 3-5 years. I'm talking about like the MP Materials deal, like the 10-year contract there that happened with the Department of War. So basically, that's the logic that we want to do.
So, I think maybe I'll turn quickly to Raab, and the U.S., this construction fund arrangement is two-sided. There's Ukraine, there's the United States. I'd be interested in your views on that from the U.S. And we think about that as a transactional arrangement in the context of a bigger geopolitical question, obviously, around Ukraine. But also, I think this is indicative of the U.S. shift to a more transactional trade approach and how the U.S. is thinking about critical minerals in that context.
Yeah, to take on the challenge of rebuilding supply chains, building diversified supply chains, I agree we need to get those common elements at the end. There needs to be offtake, there needs to be some way to have some kind of support for it, but fundamentally need to have the data to understand that. And that's got to be an individual mineral by mineral approach where you understand what's upstream in the mine, what's midstream in the processing, and who's downstream to be the potential buyers. How do you put those together? Each one of those players in that economic supply chain, that value chain, needs to be able to stay in business. You need to understand what the prices are. So that's what we're doing through DARPA, is building models to understand what the price points are to construct basically what is a Western or non-Chinese structural price for production, and then knowing which then policy tools you might need to pull to ensure that different economic players can stay in business at different prices. And fundamentally, that needs to inform which projects should be viable, and then also understanding from an individual metal perspective which mines or processing facilities need to be either brought back online with their brownfield or new greenfields put into a pipeline. One should look globally to understand the cost curves on those and not just, I think, choose individual geographies. We should be looking broadly at where the best ones are. Some of those are obviously going to be in Ukraine and other countries, but I think we need to look around the world too.
I want to come back to price support and some of the transactions that people have been talking about, and the Deputy Minister mentioned MP, and we talked a little bit about support and that price analysis, Rob, which I think is so critical as we think about how to develop onshoring of critical minerals. But before we do that, I just want to stay with the existing supply chain, if you would, for a moment, and the opportunities internationally, because part of the exercise here is not just creating a brand new supply top down through the full cycle and verticals, but it's also about protecting the existing supply chains that are there. And I wanted to think about some of those risks, maybe for the benefit of the group. And Chris, I'm going to start with you. With TechMet as an organization with assets around the world, how do you guys view supply chain risk right now?
Yeah, well, I think it's important to remember that the biggest supply chain risk that any government or company has is an over-reliance on China. So that's the top. From our perspective, because we have 10 companies all over the world in 4 continents and are completely China-free, and as has been noted, processing is one of the biggest bottlenecks. So we have to figure out how feedstock will play into those investments. We have to figure out where primary resource is located, and how to work with governments as partners to develop those supply chains, not just from the primary resource, but to all the way down to the OEMs. So it's a challenging environment, but I think the world is finally waking up to the need to, as the Deputy Minister put it better than I could, take public sector action and engagement in the private sector to create these supply chains free of China and align where, as Dominic opened up, onshore where you can, but friendshore where you must. I think it's a really important approach going forward.
And Tom, maybe you could jump in by way of example, some of the challenges that supply chains, other than perhaps structural issues or geopolitical issues, some of the risks that international supply chains face, and some of the other ways companies should be thinking about protecting those supply chains.
Yeah, absolutely. So we see one of the biggest risks to supply chains is actually from a foreign influence or influence perspective, so disinformation. And one of the reasons why we see it such a large threat is because the supply chains generally are operating in very high-risk geographies. There's huge geopolitical tension. There's also a large amount of foreign state competition as well. And at Refute, we've been monitoring the mining industry globally. And what we've seen is that 40% of the mines globally are under some sort of active campaign right now, whether that's from environmental activists to local populations, but really importantly from foreign states as well, particularly Russia and China. So for example, we've all seen in Panama with First Quantum Minerals with their mining operation shut down because of a very large, sophisticated disinformation campaign causing billions worth of impact to First Quantum. We've seen that over in Southeast Asia as well, with mining companies in this geopolitical tension, but also really in the center of next to terrorist organizations as well, where disinformation has directly led to physical harm to staff on the ground. Now, we're seeing those supply chains evolve right now. So in Africa, we're seeing that the Russia-China influence, that is evolving as well. We're seeing some countries moving away from Russia and China. And we're also seeing countries moving up the value chain as well. For example, in Morocco, over 5% of vehicles in Europe are created and manufactured in Morocco. Now, all of this involvement in the supply chain hits on risks from a disinformation perspective, which disrupts those mining operations.
Thanks. I think want to turn back a little bit away from the friendshoring back to the onshoring where you can, and thinking about how we can unlock investment in the sector. There's an increasing focus on that, and we've heard almost all of our panelists have already mentioned the requirement for some form of government support for the development of critical minerals assets up and down the industry vertical. So both in terms of upstream mineral production, but critically downstream production as well. And we've seen in particular the United States through the investments made by the DFC, but also the Department of War recently, and Department of Energy, amongst others, taking a very specific and direct support approach with respect to a number of projects. And so maybe I'll come back to Chris first on this, and then interested, Rob, in your views as well. You have rare earth assets. Those are, and have had the investment from the DFC as a significant stakeholder. You must have watched with interest the MP Materials transaction. And there we see the US very actively putting capital to work. How do you guys think about that, both as a recipient of it, but also seeing transactions like MP Materials?
Yeah, well, and to go back quickly to the supply chain risk, I think, as Tom put it, the direct intervention by China and Russia and adversarial nations is important to consider because they are vertically integrated. They are able to take losses further up the value chain or further up the supply chain in order to dominate the market. So in combating that, we're very excited to see the US government be more active in deploying the variety of tools that they have, and we hope to see more coming out of the EU and other partner nations. But we, as a recipient of equity investment from the DFC under the first Trump administration in 2020, were very unique, and I think that investment did what they hoped it would do. It helped us crowd in additional private sector capital. It allowed us to look at projects that we might not have looked at otherwise, so it was de-risking politically some projects for us. And it really catalyzed our investment and our development program across our entire portfolio. So that is one way that governments are looking to deploy equity, which is a single tool. I mean, the US also has the EXIM Bank, which has the Make More in America initiative, the Supply Chain Resiliency Initiative. The DOW tools that are being deployed by the Office of Strategic Capital are very different than the use of debt and things of that nature. Department of Energy using grants as well is really important for the R&D sector, but also loans in terms of project development in the US. So that entire menu of options is really helping build a supply chain that can be resilient against Chinese aggression in terms of manipulation of markets. Because when you're looking to develop these projects, it's really tough when the Chinese can drop the price overnight and suddenly the project is no longer economically viable and you're trying to attract additional investment to help develop it. So I'm sorry, I've lost the thread. Initial question a little bit.
Well, I think it is great, and Rob, you can jump in too. I mean, I think that you talk about creating that resiliency to address price challenges, right, from the supply control,
yes, and on
particularly the
MP
processing
deal.
control. And when we think about that, we have a number of. It's very interesting to hear you talk about the options available to government actors when you think about the different policy levers that can be pulled. But
and that was the value of the MP deal in our perspective was, they deployed the full suite almost with, direct equity investment, price support for offtake. They're even using warrants in some levels.
Right.
So that was great in terms of setting certain precedents that we hope to capitalize on, not just for U.S. projects, but elsewhere around the world as well.
But Rob, you mentioned earlier in your remarks talking about looking at pricing more globally for critical minerals. Rare earths is an example where we have a particularly opaque market and a dominated market. How do you see MP Materials in that context, providing the price support that Chris was just talking about and others have spoken about as well this morning?
Yeah, in a concentrated market where there's basically a monopolist that can control the supply and then can use it opportunistically to push out new competitors when they're at vulnerable times and when they're just getting going, it's fundamentally important that there be some strategy to address that. Blended finance that Chris was talking about, so government money having a vote of confidence in a project can definitely bring in more private sector money. I think the other thing to think about this on a timeline, that is, there's a lot of debt available to companies that are at the definitive feasibility study level, both from private banks and from government sources, the same ones that Chris was mentioning, DFC and Export-Import Bank, and even the Department of War's Office of Strategic Capital can do loans. That part of the kind of pipeline close to production is sort of well taken care of. The fundamental challenge is the earlier stages with these junior miners who are often chasing equity investments. The US government has done limited amounts of equity investment. This is one exception here with TechMet, but figuring out how to get more higher risk capital in place that government is pushing out the door. One answer to that was what the US government recently did with the Development Finance Corporation and Orion, the private equity firm. So help them seed a fund that they hope to be $5 billion. Right now it's 1.8. And I think maybe Dominic will have something to say about this at the same point too. These kind of funds that can go out there, have diversified portfolios, and go after a number of earlier stage assets, and in our view at the forum, going after minerals like antimony and tungsten and tantalum, the minerals that we need to see production of that may not happen on their own if the market was left to its own device. It would still stay relatively concentrated in a country, in a third country.
I mean, Dominic, it'd be great to hear your thoughts on that wearing your Appian hat. I mean, I think one of the things when we talk to the Canadian government, just by way of a parallel to the U.S. organizations you mentioned, when those crown corporations, as we would refer to them, or fund buckets are thinking about investments, they are thinking about what role private capital can play alongside for a variety of reasons. I think this opens up opportunities for the Appians of the world where you have where that risk can be shared and the government is providing support.
Yeah, look, absolutely right. And from an investor's point of view, the kind of things that you need to unlock the private capital are relatively straightforward. If you're talking about mining projects, permitting is a big issue. We know that's true from the US point of view, Australia, Canada, certainly the UK. We just signed a deal with the IFC, the if you like, the private sector investment wing of the World Bank, and that's up to $1 billion. They'll invest side by side with us. For us, the great advantage is it de-risks, particularly early stage, some of the investments. It allows our capital to go further from their point of view. So looking at also from a, if you like, the public, public interest side of things, whether it's a national government or an international organisation, they get to rely on our ability with an in-house team of 100 geologists, metallurgists, as well as the finance experts, about, first of all, how to raise the money globally, but then how to build the mines. And the point was made from Rob about equity. And of course, equity control from a government's point, I mean, we specialise in equity, although we do a credit fund as well. But the advantage there of equity investments, both that governments make, but also then that you get from investors, is one, the mandate discipline. I think you talk to most policymakers, when will the thing get delivered? Will it be done on time? Equity control gives you much stronger levers over that. Secondly, the elephant in the room is governments want, and international organisations want to know two things: that they get the offtake, that doesn't get snaffled up, whether it's by China or anyone else that is not a high trust partner, and that the asset itself, given the kind of timeframes that investors want in terms of exiting to make returns for their LPs, that the asset doesn't then get snaffled up by China or otherwise. Equity control gives you that. So we think that the IFC formula is very attractive. We've had a lot of interest off the back of the announcement, and we're talking with the US, with Australians. We've had conversations with our Ukrainian friends as well about this. But those core elements, permitting, seed capital, equity control, for unlocking the private capital that is so sought after, actually they're relatively clear. How you do it's more complicated. TechMet's got experience, Orion's got experience, but the core elements that investors are looking for, relatively clear now.
It's interesting, and I do find that there's an inherent conflict a little bit because some of the policy objectives are not necessarily going to be aligned with the private capital ultimate objectives. And so I find that the government organizations are looking for the discipline on valuation and other assessment discipline, but might not be completely aligned on exit, for example, or the approach for the reasons you mentioned, right? Flexibility on exit and other options.
But you can write, I mean, it's a good challenge, right? And part of the job of all of us on this panel, and I've sat on both sides of government, is to narrow that gap between policymakers' expectation, investor reality. And what we need to do is be more creative about it. TechMet's a really good example of this. And the US administration, there's lots of sort of political furore around it, but the truth is trying innovative things that haven't been done before. And what we need to see in Europe and in other parts of the world is that follow suit. Otherwise, you won't cover the range or the volume of what's required. So I'm all for innovation, and we're also really interested in the challenge we get. Well, actually, there are certain things that normal LPs won't necessarily want, but the US government will definitely want. We've heard it from Australia as well. Ukraine will for sure have expectations. The question is how you fuse the best of those expectations with the private sector dynamism and the volume of capital that only they can unlock.
You mentioned Europe, Francesco. Your views on how this plays out in the EU context, and one of the I'd be interested in your thoughts in particular on. I mentioned that dichotomy of goals a little bit, and how do government views around sustainability and development in a sustainable fashion, which is not necessarily always aligned with some of the speed that we heard requirements that we heard about on the last panel. How do you see that playing out?
Yeah, it is not necessarily aligned, but it should. I mean, we need to find a way of including sustainability considerations in these. It is true that often when it comes to the purchasing departments of big companies, thinking the automotive sector, for instance, their main concern is cost. So they just want to have the materials at the cheapest possible price. So this does not often include consideration on ESG compliant material, unless of course they are mandated to do so, or considerations on secure sourcing. These, I think, should be clearly addressed, and we do need to put a monetary value on them. We need to make sure that car makers and companies in general get the right signals from the politicians so that they can put a price on that. An element might be, for instance, to link incentives to ESG criteria or to secure criteria. So, again, for instance, many countries give incentives to consumers for buying an electric vehicle. If those incentives are linked to batteries or raw materials made in Europe or purchased or secure from a friendly country or from ESG compliant materials, that would already give that monetary value able to match that gap between a car, an EV manufactured with cheap and unsecure materials compared to an EV manufactured with secure and ESG compliant materials. The other element that I think we need, and this was already mentioned, price support mechanisms are clearly needed. We do see a lot of volatility in the market. Lithium experienced extremely high volatility in pricing in the past years, went from very high spikes, which created problems for car makers in securing lithium, to a situation of extremely low and depressed prices that do not really allow for investments in the sector. So we do understand that the EU is thinking about a JOGMEC-like agency which could potentially also do price support for some projects. That is definitely something that will be needed. The other element, and that was already mentioned, is equity participation together with CapEx support. We understand that some member states in Europe could already in principle do it, we will probably need also some more activities at the European level to do so, because at the end of the day, we have two issues. Things in Europe are more expensive, so that gap needs to be matched, and the price volatility needs to be coped with, because that really destroys the market.
We've been talking a little bit of a lens of upstream in developing and supporting the development of mineral assets. But of course, processing, as you guys have all mentioned, is a key issue here, and part of what creates the price distortion, where that processing sits, but also where the capacity is for that. And one of the concerns, as you mentioned, Dominic, is we're going to support this project, but then the material is going to go to China. We're going to build this project, but the ultimate project may well end up in hands of an unfriendly nation from a trade perspective. So we need to think a little bit about developing that other capacity. I want to talk a bit about developing processing capability. We do hear that nations are very focused on developing not only upstream, but the downstream capacity, and supporting upstream if downstream capacity comes with that, and some commitment to do that. But when we think about how we're going to manage supply chains and how we're protecting that downstream or past the development of upstream mines, one of the first places we might start is recycling. And I know, Deputy Minister, you have views on that, on Ukraine's unique position to develop an industry in that respect. So maybe you could share that with the group, your perspective.
Thank you, Mike. I believe that, yes, we actually have to focus on one very important thing. Even if Europe, the Western world, solves its problems with the upstream, and even if it solves its problems with the downstream, which it has already solved because a lot of IP technology is here, our biggest cause of concern is the midstream. So basically, the midstream can be tackled in two ways, in our opinion. First of all, in terms of recycling, countries like Ukraine, we have a massive legacy of tailings, of mine waste left over from the Soviet legacy. We have to understand one very important thing. 70% of all waste in Ukraine actually comes from metallurgy and mining activities. That opens up possibilities to processing tailings from the uranium processing cycles, titanium processing cycles, alumina processing cycles, and now this brings me into the second block of the policy and of the projects that we can tackle. Ukraine and countries like Ukraine can be a real powerhouse. Why? Because Ukraine was a titanium operator. And this is why a midstream processing operation is so important. Because if you take, for example, the titanium value chain, metallurgical titanium value chain, you will go the chloride process. You will be using chlorine to process your titanium ores into titanium slag or synthetic rutile. Then you will get through the Kroll process into titanium sponge, going through tetrachloride titanium. So basically, the idea is that you will be using chlorine and you need chlorinators. Why is that important? It's very important because you will not only be able to produce titanium sponge, you will actually be able to do something else. You will be able to extract the required and the very, very exotic and mysterious and mystical byproducts that are so needed today. The byproducts that are the micro markets but have the macro levers. So basically I'm talking about products like germanium. I'm talking about products like hafnium. You do know that in order to get hafnium, you need to go through the chloride cycle, you need to get TiO2, you need to get zirconium, and only then you can get hafnium. Same goes for germanium. In order to get germanium polycrystallic or monocrystallic lenses that you would be using in night vision goggles, you would need to go through 7-8 steps, but you go through chlorination. So by developing a very, very good, robust, complex midstream processing system, you're opening yourself up to recycling opportunities, and you're opening yourself up to secondary extraction of important byproducts that you wouldn't be considering them feasible otherwise as a separate product. So basically the idea is combine it together, and when we pitch or when we develop a strategic project like that, bring those little side projects into the hub, into the general economics of the project. That's the logic.
No, it's fascinating, and I think it's a fascinating opportunity, I think, globally. Tom, before we come back just to finish off quickly on process and downstream development, We think about onshoring. You mentioned Cobre Panama, other jurisdictions where you guys have done some work. We often don't think necessarily about disinformation as we exercise this goal of onshoring capabilities and develop and moving processing capability, moving critical mineral supply from foreign jurisdictions to home or to the West. Does disinformation play a role there? Are you guys seeing that in your activity?
Yeah, absolutely. So I think if you think about the supply chain with onshoring or nearshoring, you're fundamentally breaking or changing that supply chain. So there's a new ecosystem on the supply chain that's being formed, which inherently has geopolitics wrapped around it with new states competition, for example, local communities, activists as well. But I think the important thing is the existing supply chains. We've talked a lot about reliance on China, for example, on this panel. Is by breaking that supply chain that maybe had China as part of it, there are new geopolitics at play which have an influence from an information perspective too. So if we talk about Europe, which is the example we've been talking about, is what we're seeing right now across Europe is really it is a warfare, it's a national security issue much wider than mining. So we're seeing from a disinformation perspective right now, spilling out from what's happening in Russia and Ukraine. It's affecting elections, it's affecting multiple different industries across Europe right now. But we're seeing that from what we're monitoring really affecting mining. So just going on another example that's in the public domain is Rio Tinto in Serbia with their Yegor mine, which has been paused right now. That was a large-scale campaign that started with disinformation, tens of thousands of people on the streets, and the whole mining operation paused. Now, what we found there is that the same social media bot farms that were used against Rio Tinto were also used against the Romania election as well. So we're seeing these mining organizations are just part of a much bigger geopolitical play. And I was talking to the Deputy Minister just before this panel, and certainly that's something that we're seeing across from a Ukraine perspective as well as affecting the mining industry in Ukraine.
It's interesting. It's a form of a challenge to the exercise of onshoring these supply chains, right?
Absolutely.
It will be a challenge. I want to leave a minute or two for questions at the end. Chris, turning back to you for a moment, and Francesco, your views on this as well. Your firms operate processing capability globally. What do you see as people who are in that game as the main challenges and opportunities? A bit of an open question for the idea of creating processing capability in the West.
Yeah, and the Deputy Minister put it really well. I mean, one aspect, depending on one challenge here in doing this in 45 minutes is painting with the broadest strokes possible. So every metal is a different market and things, but creating economies of scale, especially for rare earths and especially for heavy rare earths, is really, really difficult. But standing up these projects for processing is incredibly technically challenging, capital intensive, and it requires long-term patient capital, which is why, and one thing I did want to note is we're all up here this week advocating for increased public sector support and public sector funding for these areas, but that's a two-way street, right? I mean, TechMet has delivered or paid a dividend to the DFC on their investment, and we've been good stewards and made the U.S. taxpayer a lot of money, but understand that that's something that needs to be taken seriously because we're asking policymakers to take a risk on these projects as well and looking for public sector money to fill the gap that exists from private sector financing for projects like processing in particular. So I do think it's an increasing challenge, but we're seeing, as I mentioned before, the suite of funding is really important for R&D that can help prop up some of the processing technologies that will be important. And areas where Western countries, US, EU in particular, can compete with China is on innovation. So with the proper funding and support, the proper partnerships and collaboration, I do think processing is an area where our companies can really excel. But we do need to consider the feedstock on one end and the offtake on the other to make sure that they're economically viable long term, because it's one thing to do it in a lab, it's another to scale it up.
Francesco, your views?
Yes, just building on this, indeed the economics of building a refining plant, a processing plant in the West are quite challenging. We know that it is capital intensive to do so. We know that the time needed to actually open that plant is often quite long. There are issues with securing the feedstock that will have to feed the plant, and then we have the operational cost and the uncertain offtake. In the case of lithium, the next step in the value chain is, of course, cathode active material manufacturing, and at the moment, that is mostly in Asia. So we have already a challenge there that even if we had a refining plant in Europe, we most likely would have to ship the material to Asia to be turned into cathode active material, and that doesn't make much sense from a security of supply point of view. But I think, again, one of the main challenges, which is often overlooked, is the technical difficulties of achieving the required purity. For battery-grade lithium, we often talk about 99.5 purity level, but that's not a standardized measure. It depends actually also on the source of the material, on which impurities and how many impurities are included there. So often we are talking about a bespoke process that needs to be adapted to the feedstock that is available. And it's not so easy to do that, also considering that we do have a lack of skill set and ability in Europe and sometimes in the US to do that, because in most cases the processing plants are not there and they are in China or in other countries. So we do have a skill gap that needs to be matched.
Well, thank you, and a quick initial thank you to our panelists. Before we say goodbye, I wanted to leave a minute for a couple of questions, if there are any.
Can we take time for one question from the floor? I'm going to this gentleman here. Just say your name.
Hi, I'm Tom Kavanagh from Media. We've heard a lot about sort of price floors today and the difficulty in investing in mines in the long term. I think one of the most insidious sort of forms of disinformation in these markets is the price manipulation that we see going on from certain price reporting agencies and even exchanges at some point. So I just want to ask to the panel, maybe Tom, you could take this on straight away, is how do we fight that kind of disinformation in terms of price manipulation emanating from China?
So I'll give one perspective, and I'm sure a lot of the other panelists will have another perspective. So for me, with all disinformation, is you have to understand what's actually happening to start with. So you have to understand that actually disinformation is taking place, what form it's taking, and ideally where that's being attributed from, so where that's coming from. So in your suggestion here is from China, is to understand the characteristics which brings it back to China and understand the impact that's actually happening in that place. And then you need to do something about it as well. And there's multiple different strategies you can take in order to be able to put your narratives out there in order to be able to overcome those disinformation campaigns. Anyone else have a perspective?
I would just add that one of the big problems with that, when it's manipulated price in these minor metals where there's no exchange, that gets built into the offtake agreement. So if we're trying to develop alternative mechanisms for seeing a structural price, that can be used for the offtake. So you're not relying on this kind of volatility that's manipulated.
Go ahead.
I'll be very quickly. China can easily operate under price inversions. That pretty much breaks down the market. How do they do that? They have the shadow banking on one side feeding the system. On the other side, they have a very, very good system of support through, like various mechanisms of shifting the margin down. They can shift the margin on the stream, So basically, the best way to fight that and basically get the prices back to normal is by having government to private mechanisms that can provide effective cost of capital facilities, so basically long-term credit, and support offtake through basically the guarantees or actually offtake facilitation mechanisms. So that would kind of help level the prices down.
Great. Once again, thank you all to our panelists. Fantastic discussion today, and thanks everyone for listening in.
Thanks, Mike.